I'm keen to, I don't want to get too much into the weeds, but can you tell us a bit about how that all came about, Tom?
Yeah, absolutely. So, I guess a little bit more kind of on my background for context. I've spent a lot, feels like a lifetime, but my career so far has been within financial services and wealth management. So I spent my, entire career after leaving university talking with clients, helping them manage and grow their money and helping them to invest. And over the last kind of, 6, 7, 8 years, I increasingly kind of came to this point in the road where I had a kind of a growing sense of personal values around ensuring that we do everything, all the decisions that we're making have a sustainable kind of slant or point to them. And at the same time, I was starting to see that same thing come from an increasing number of clients and friends and colleagues and people that I spoke to about how they think about their kind of financial world. And as we looked at that, as I kind of stopped and looked around, the space that was around us, whether that be in financial planning or direct investment or wealth management, whatever it may be, it was very, very clear that there wasn't anything to service anybody who didn't have $1 million, basically, which is an enormous gap in the market because the vast majority of us are normal people who, own a salary, probably rent a house, trying to live our lives, and we don't have access to these things that are kind of exclusive for the wealthy. And so Goodman's was really designed to first overcome this enormous problem for us, which was to go, how do we help customers invest in a way that aligns with their values? That was kind of the first point. As we did that, as we started to kind of look into what that actually meant for people, we really found that the most critical point at this very early stage of what kind of responsible and sustainable investing is about is that sustainability is very, very personal. And I think lots of people have misunderstood that. And when I say people, I mean lots of kind of product providers, investment managers. They've misunderstood that what I care about may be very different from what you care about then. And that's not a slant on you, and that's not a slight against me either. We could just be very different people. And recognizing that becomes a really critical point of helping people engage with responsible investing. Where are their passions? What do they want to avoid? Helps them get engaged.
Yes, and I think that it's, like you say, everybody's got a different lens on it. I know we worked with a client just recently, and they were insistent that they didn't want to invest in anything that had anything to do with alcohol. It's actually very difficult to, without going into direct shares, we spent a long time looking at the different options in the market, and you put on you've got the big supermarket chains that got alcohol attached to them. Then you got, there's obviously pure alcohol plays, but then there's so much that it touches a lot of these bigger businesses as well that, it was really different. But for her, that was something that was really important to her. For other people, that might be something that's not important, but they're much more focused on, renewables or the environment or something like that. And I think, testament to the app, that's one of the things that really teases out quite well as to what are the things that are important to you and what does that mean for then you narrowing down the field of options that are available.